Well, just as things were looking like they were going to cool down a bit at the end of 2021, 2022 has started off absolutely on fire. I mean, at the end of December, I was seeing price decreases, homes closing below their list price, and actual negotiation on repair items. The overall days on market had increased, only by like a day or two, but it had changed. Now we are back to seeing 10 plus offers on homes, and they are selling well over the list price again. It has been nuts. What happened? Why did everything change so quickly? Every realtor I talk to says the same thing. I thought we were heading back to a more normal market. What's going on? How long is this going to last? Is this all investors? Should I wait to buy or buy now? Let's dig into this. There were headlines that the real estate market was cooling. Then January 2022 came, and we began our year with historically low inventory, like 5% below where we started in 2021, which was already low. Yet the number of contracts accepted has continued to stay high, further exacerbating our supply issues. As you can see from this chart, the price per square foot for active homes on the market jumped pretty significantly the third week of January. And the Cromford Market Index has been increasing steadily since December. Remember from our other videos when I talked about the Cromford Market Index, this is a metric used to project pricing so you can see where pricing is going. So that jump in the Cromford Market Index in December, we really saw the home prices jump in January. Now, it's very normal during the winter months for us to have a fewer listings to sell because many just don't want to put their homes on the market through the holidays. However, during this time, the demand stayed pretty steady. So when our demand picked up into high gear, prices really increased. Now, like I said, our inventory was 5% lower than our previous January levels, which were already really low. So as our demand started to increase, it started to again feel frenzied. Homes were coming on the market, but they were flying right back off the market. The first house I put on the market in early January received 12 offers in 3 days with about 75 showings and sold about $85,000 over the list price. The next one I put on the market was even crazier. To give you some perspective, you can see from this chart, so far this January is off to a similar start as January in 2021, like a rocket ship to the second level of insanity with home prices and low supply. Now, who's buying these homes? Are these all investors, people coming from California? I can tell you from the contracts that I've received on listings so far this year, they are not investors. They are primary residents and not all from California. Let's take a look at this chart from the Cromford report that will show the data about the investor buyer. As you can see from this chart, the majority of the buyers are in fact owner-occupied buyers. The total percentage of owner-occupied buyers is down a little historically, but it is still the bulk of our buyers. They are not investors or second homeowners. I look at this and it's a very good thing. These are people that either already live here or who want to live here and call Arizona home. Now, we've talked about this in previous videos, but many people are moving to Arizona from other states. And here's a map that will show you the states with the highest percentage of population change, and Arizona is right up there. But we still have a large number of current Arizona residents just moving either to a larger or a smaller home. Now, we keep talking about how low the supply is. How will this change? One way is to see builders increase the number of homes they're building. However, the number of building permits for single-family homes is actually down by 24% of March of 2021. Builders have been struggling with supply chain issues, so they have not been able to build as quickly as they have in the past. However, the number of permits is significantly down from the height of our market when they were actually overbuilding. There is a fine line for this, but we are nowhere near overbuilding. Now, builders are experiencing the same issues as resale homes in that as soon as they have a few homes to release and sell, they are gone. Most of the buildings have waiting lists. Some of the new home construction communities have lists of hundreds and hundreds of people for 40 homes. Now, I have clients that have purchased in many of these new home communities, and they are having to move quickly, not to lose their place in line. Some have even had to make an offer on a lot above the lot premium price just to secure their position. Now, when you're dealing with new constructions, you always need your own representation. And during times like these, you really need someone there to help you navigate these things, because builders change their contracts and their processes, which can get very overwhelming and very confusing very quickly. I still hear people say that they believe foreclosures are coming. So let's take a quick look at where we are with the forbearance nationally. As of January 11th, there are only 780,000 homes that remain in forbearance. So I think any hopes of waiting to get that deal has gone by the wayside. So the next question I'm always asked is, how much longer is this going to last? I think that's the $1 million question. Most analysts agree that as far as affordability, we just cannot sustain another year of 28% plus appreciation in the Phoenix area. But with little new inventory being added to the market, the demand would have to decrease for the appreciation to slow. Now, with interest rates beginning to climb, this could slow the market purely based on buying power. The people this does not affect are those paying cash, which is a substantial number of buyers in our current market. At this point, our prices are looking like they will be rising for at least the next 3 to 6 months, and rather quickly. I believe we will ride the same line similar to the one from 2020. If interest rates spike, this is what could cause the speed of our market to slow until everyone gets their feet back under them. But as you can see, from the month of January, our supply has gone down, our demand has only slightly decreased, while the Cromford Market Index has increased considerably, which means prices will follow. When looking at this and the rate at which home prices have gone up, many sit and wonder, is now really a good time to buy? Am I buying at the top of the market? This is where the topic of affordability comes into play. If you take a look at the median home price of a 1,500 to 2,000 square foot home at about $430,000, your mortgage right now would be about $2,200 a month, which is very close to what you would pay in rent. The benefit you have to owning is you are paying yourself rather than your landlord. Growing your equity all while your home value is also increasing. In this scenario, after 5 years, you could have potentially gained $256,000 in equity rather than paying your landlord to make this money. The biggest worry I hear from those waiting to buy is that they don't have enough money for the down payment because they believe they need 20% to buy. I can't suggest this strongly enough. Talk to a mortgage professional to learn what you can do. You may be really surprised. With that in mind, the biggest piece of advice I can give for anyone in this extremely competitive market is make sure you get everything in order and you are ready to go when you find the home, because you will likely not have a lot of time before you need to make an offer. And we have also gotten back into the waiving of appraisals, agreeing to buy the home as is, and I have also seen buyers offering to pay the seller's closing costs. Buyers in this market are having to get very aggressive with their offers. Just make sure you are working with an agent that can explain all these different options to you so that you are making the right decisions that you are comfortable with. If I can help answer any of these questions, please feel free. Reach out, call me, email me, text me, post a comment down below. If you know someone that would benefit from this information, make sure you pass this along. As always, I thank you for watching, and I'll see you next time.